The Pentagon just named a robot company a threat to national security. Days later, China cleared that same company to raise money from public investors. On July 3, 2026, Reuters confirmed regulators approved Unitree Robotics for a Shanghai listing worth $619 million. 1 month after the U.S. Department of Defense flagged it as a military-civil fusion contributor. 2 governments, 2 verdicts, 1 robot maker caught in the middle. What happens when a stock exchange and a security list disagree about the same company? Unitree's approval did not arrive in isolation. China's robotics sector has spent much of 2026 racing toward public markets, and Unitree is the first pure-play humanoid company to clear the hurdle, a test balloon for an industry watching from the sidelines. The stakes sit at the intersection of 2 systems that rarely move in sync: capital allocation and security policy. Beijing wants proof its industrial strategy in embodied AI can be underwritten by public investors, not venture funds alone. Washington wants proof it can slow capital and customers flowing toward companies it considers linked to the People's Liberation Army. Unitree sits at the center of both tests, and neither outcome is settled. Will public markets actually underwrite this bet? China's onshore listing market has been sluggish for years. A successful, oversubscribed Unitree debut would signal that investors are willing to back hardware companies with thin patent portfolios and revenue still concentrated in research and education customers rather than factories. A weak debut would suggest the humanoid narrative has outrun the fundamentals. Then there is the question Washington still has not answered for itself. The Pentagon's designation does not ban trade outright. It restricts direct government contracting starting this year, then indirect contracting the year after. Whether that slows Unitree's expansion into research labs across the United States and Europe, or becomes a mostly symbolic gesture institutions root around, remains unresolved. A third pressure is building beneath both of those. Market researchers count more than 100 humanoid robotics companies operating inside China right now. Most have no path to profitability, let alone a public listing. Unitree's approval sets a benchmark valuation and playbook that rivals will now be measured against, accelerating a consolidation industry analysts have been predicting since early in the year. Some describe the coming wave of humanoid IPOs as the mechanism separating durable manufacturers from a crowd riding the same narrative without the same balance sheet. Timing sharpens all of it. Unitree is listing weeks after a presidential summit meant to stabilize trade relations, and weeks after a Pentagon list suggesting the underlying friction was paused, not resolved. Investors buying the offering are not just betting on robotics. They are betting on how 2 governments manage a relationship shifting under the same company's feet. None of it resolves cleanly, and that is the point. A single robotics company has become a proxy for how far industrial policy, capital markets, and national security policy can pull in opposite directions before something gives. Look at the numbers behind that approval. Unitree filed its Star Market Prospectus on March 20, 2026, a primary financial disclosure with legal consequences for inaccuracy. Revenue reached 1.71 billion yuan in 2025, up 335% from the year before. Adjusted net profit rose to roughly 600 million yuan, a jump of 674%. Triple-digit revenue growth alongside a first profitable year is rare in a robotics sector where most competitors are still burning cash. According to Reuters, the July 3rd approval clears the way for Unitree to raise 4.2 billion yuan through the offering, with pricing and share allocation still ahead, and a debut possible before the end of July. Read the filing closely, and a structural shift emerges. Humanoid robots made up just 1.9% of Unitree's core revenue in 2023. By the first 9 months of 2025, that share had climbed to 51.5%, overtaking quadruped robots as the company's primary product line. Average humanoid selling prices fell from roughly 85,000 yuan in 2023 to about 25,000 yuan in 2025, even as gross margin improved to nearly 60%. Evidence that falling prices and rising margins can coexist when a company controls its own component supply chain. Zoom out to the wider market. According to Bloomberg, citing research firm Omdia, Chinese manufacturers accounted for the vast majority of the roughly 13,000 humanoid robots shipped globally in 2025, a fivefold increase from 2024. Shanghai-based Agibot led that count, with Unitree close behind, followed by UB Tech. The scale gap between Chinese and Western shipments is not marginal. It is an order of magnitude head start, built on a domestic supply chain already tuned for high-volume electronics and electric vehicle manufacturing. Unitree has also been pushing that advantage outward. Bloomberg reported on April 15, 2026, that the company began selling its cheapest humanoid model directly to consumers in the United States, Canada, Japan, the United Arab Emirates, and Singapore through Alibaba's AliExpress platform, priced at roughly $8,150, including import fees. That is a direct-to-consumer international sales channel. Most Western humanoid makers, still focused on industrial pilots, do not yet operate. China's stock market is only half of this story. Washington is running an entirely different playbook. The U.S. Department of Defense's official Section 1260H filing, published June 8, 2026, names Unitree specifically, stating the company is affiliated with China's state assets regulator and identifying it as a contributor to the country's military civil fusion program. That places Unitree alongside Alibaba, Baidu, and BYD on a list of 188 flagged companies, a roster that has grown sharply since the Pentagon's last update. The filing notes the restriction arrives in stages. Direct federal contracting is prohibited starting June 30, 2026, with indirect procurement bans following a year later, a staged rollout, not an immediate cutoff. Three comparisons put Unitree's moment into context, each measuring the present against a defined prior point. First, the capital markets benchmark. According to Reuters, citing LSEG data, mainland Chinese IPOs raised $7.7 billion in the first half of 2026, up 64.4% from a year earlier. Unitree's listing arrives inside a market already reopening for large technology offerings, not one starting from a standstill. The same push during last year's slower IPO window might have produced a smaller, more cautious offering. Second, the shipment benchmark. Roughly 13,000 humanoid robots shipped worldwide in 2025, according to Bloomberg's citation of Omdia data, more than 5 times the volume from 2024. A category that barely existed in commercial terms 2 years ago is now growing at a pace closer to a maturing consumer electronics segment than an experimental one. Set that trajectory against the semiconductor and electric vehicle ramps of the past decade, and the shipment curve looks less like a fad and more like an industrial transition already underway. Third, the regulatory benchmark. The Pentagon's 1260H designation carries a 2-stage clock. Direct government contracting with listed entities becomes prohibited starting June 30, 2026. Indirect contracting, buying components or services that pass through a listed company, does not become prohibited until June 2027. That year-long gap is itself a signal. It tells American firms they have roughly 12 months to audit supply relationships before the tougher rule takes effect. And it tells Beijing that Washington is applying pressure gradually rather than immediately severing trade. Put the three benchmarks together, and a pattern surfaces. Capital is flowing faster into Chinese robotics than a year ago. Product is shipping faster than a year ago. Regulatory friction, while real, is arriving on a delayed schedule rather than an immediate one. For now, momentum on the industrial and financial side is outpacing the drag from the security side. Though that balance is only as durable as the next 12 months of enforcement decisions in Washington and the next earnings disclosure in Shanghai. That imbalance is not permanent. Regulatory clocks can accelerate if Washington decides a staged rollout is too slow, just as capital markets can cool if a single earnings miss reframes the sector's growth story. The three benchmarks describe where each system stands today, not where it stands a year from now. None of this guarantees Unitree's story ends the way its prospectus implies. The company's own filing discloses that a majority of humanoid revenue still comes from research and education customers rather than factory floors, meaning the industrial deployment story investors are pricing in is still mostly aspirational. Enterprise reception and tour guide use, not manufacturing labor, accounts for the largest share of what little industrial revenue exists today. Profitability is also less linear than the annual headline suggests. Unitree's own regulatory filings, cited across Chinese financial media ahead of its listing hearing, show first quarter 2026 revenue climbing sharply, while adjusted profit fell just as sharply. A divergence the company attributed to rising research and sales expenses alongside intensifying price competition among domestic rivals. A single strong year does not erase the pattern of a hardware company still absorbing the cost of the market share it is buying. The Pentagon designation carries its own asterisk. Section 1260H does not impose sanctions, and companies added to the list have historically disputed the designation while continuing to operate commercially in the United States. Unitree, Alibaba, and Baidu had not issued formal public responses at the time the list was published. Whether the designation meaningfully slows Unitree's push into American research institutions or simply adds a compliance step that most customers absorb will not be clear until enforcement begins. There is a diplomatic backdrop worth naming plainly, too. The updated list arrived only weeks after a summit between the American and Chinese heads of state aimed at stabilizing trade relations, and only months after the Pentagon briefly published, then withdrew, an earlier version of the same list without explanation. That inconsistency suggests the policy itself is still being negotiated internally in Washington, not settled. The honest reading is not that Unitree is invulnerable to geopolitics, nor that its business is fragile disguised as strength. It is that a profitable, fast-scaling hardware company and a national security designation are now sitting on the same public record, and the market has not yet had time to price what that coexistence actually costs. Back to that split verdict. One government cleared Unitree to raise money from public investors. Another government flagged it as a contributor to military-civil fusion. Both verdicts are now permanent parts of the same public record, filed weeks apart, about the same company. Unitree did not choose to become a test case for whether industrial policy and national security policy can occupy the same balance sheet. It simply built robots fast enough and cheap enough that both governments had to weigh in. The listing will price, the designation will stand. What resolves the tension between them is not this quarter's headlines, but next year's enforcement record. Facts over fear.